Hello traders, welcome back to the channel. In today's comprehensive market update, we are performing a deep dive institutional analysis into 4 of the most traded assets in the world: gold, XAUUSD, WTI crude oil, NAS100, US100, and silver, XAUUSD. Today is March 30th, 2026, and we are seeing significant shifts in global order flow. In this video, we will use our proprietary Alpha Hybrid Intelligence (AHI) framework to strip away the retail noise and focus on where the smart money is positioning. We will cover market structure, liquidity mapping, and our specific research projections for each pair. No retail jargon like profit book or stop loss here. We are sticking to institutional terms to keep your trading professional. Let's start with gold. Currently, on the H1 timeframe, gold is displaying a textbook bearish market structure. For the last several sessions, we have seen a consistent pattern of lower highs and lower lows. This indicates that institutional selling pressure is sustained and that the broader macro narrative is favoring the bears. As of today, gold is trading around the 4,530 level. Looking at the chart, the most critical supply zone sits between 4,580 and 4,620. This area represents a massive cluster of institutional sell orders. Every time the price attempts a rally into this region, it is met with aggressive impulsive selling. From an AHI perspective, this is not just a resistance level, it is a point of interest where big banks are distributing their long positions. On the downside, we have a clear research projection toward the 4,400 and 4,330 levels. Why these levels? Because there is significant sell-side liquidity, SSL, resting just below the previous swing lows. Markets are like magnets. They move toward liquidity. Our risk level for this setup is strictly maintained above 4,620. If the price breaks and holds above this ceiling, our bearish thesis is invalidated. The primary scenario for gold is a pullback into the 4,550 to 4,580 range, followed by a rejection that pushes price toward our demand base at 4,080 to 4,120. This demand base is a high probability zone, where we might finally see a shift in order flow. Until then, we remain short biased. Patience is your best friend here. Wait for the market to come to your zone. Moving on to WTI crude oil. Unlike gold, oil is currently showing a bullish shift in structure on the 1-hour time frame. We have recently broken out of a heavy consolidation phase, forming higher lows and higher highs. This transition suggests that institutional buyers are stepping in, likely driven by the ongoing geopolitical tensions and supply-side constraints we are seeing this March. The price of WTI is currently hovering near the 101.30 mark. However, as we approach the 103.50 to 104.50 supply zone, momentum is starting to slow down. This is a classic sign of an exhaustion gap. In our AHI framework, when momentum fades near a supply zone, it indicates a high probability of a corrective move before any further upside. Our trade plan for WTI involves a research projection for a sell entry at 102.70. We are looking for a short-term pullback. Our risk level is set at 104.50. If the price reacts from this zone, we expect a healthy correction toward the 100.00 psychological level, and potentially down to the 92.50 demand zone. It is important to understand that while the macro trend for oil is bullish, we do not buy at the ceiling. We wait for the smart money to flush out the late buyers, retail liquidity, before we look for long opportunities at the lower demand base of 88.50 to 83.50. For now, the focus is on the rejection at the 104 handle. Always trade the structure, not the news. Next, let's analyze the NAS100. The Nasdaq has been under immense pressure lately, and the H1 chart shows a very aggressive bearish trend. We are seeing fast, impulsive moves to the downside and slow, corrective grinds to the upside. In institutional trading, the speed of the move tells you who is in control. Right now, the sellers are moving with high velocity. NAS100 is currently trading around the 23,200 support area. However, do not be fooled by this minor bounce. From a liquidity perspective, the smart money has already taken out the sell-side liquidity below 23,500. What we are seeing now is a reaccumulation of shorts. The market is moving higher just to tap into the supply at the 24,000 to 24,300 zone. Our specific setup for NAS100 involves an entry zone between 24,000 and 24,300. This is where we expect the next big impulsive leg to start. Our risk level for this trade is 24,500. If the price breaks this level, it would suggest a deeper retracement toward the 25,000 macro supply. Our research projections for the Nasdaq are aggressive. We are looking for price to reach 22,800 and eventually the 22,600 demand base. This index is sensitive to the current high interest rate environment, and until we see a change of character CHOCH on the daily timeframe, we are only looking for sell setups. Professionalism in trading NAS100 comes from ignoring the intraday noise and focusing on the higher timeframe order flow. Finally, let's look at silver. Silver often mirrors gold but with much higher volatility, and today is no different. On the H1 timeframe, silver is firmly bearish, trading near 69.80. It has crashed nearly 44% from its January highs, and we are currently seeing a descending wedge formation. The institutional supply zone for silver is currently sitting at 7,150 to 7,250. Just like gold, silver has buy-side liquidity resting above equal highs in this area. The banks will likely push the price into this zone to trigger buy stops from retail traders before reversing the price sharply to the downside. Our plan for silver is to wait for a rejection at the 7,150 to 7,250 zone. Once we see a bearish institutional candle, our research projection targets the 6,600 and 6,200 levels. The risk level for this setup is at 7,350. If silver manages to close above 7,450, the bearish thesis is paused, and we may see a relief rally towards 7,800. However, given the strength of the US dollar this week, the probability of a breakdown is much higher. Silver's industrial demand is strong, but in the short term liquidity is king. The market needs to sweep the 61.00 lows to find enough buyers for a long-term reversal. Until then, follow the trend and respect the supply. To wrap up today's analysis, let's look at the big picture. We are seeing a correlated move where the dollar strength is weighing heavy on gold, silver, and NAS100. WTI crude is the outlier, showing strength, but it is currently overextended and due for a correction. The key to success in this market is not about being right, it's about managing your risk levels. In the Alpha Hybrid Intelligence model, we never predict, we react. We wait for the price to hit our marked supply or demand zones, wait for the institutional signature, and then execute. Summary of our zones. Gold, sell from 4,580 with risk at 4,620 and target 4,330. WTI, sell from 102.70 with risk at 104.50 and target 92.50. NAS100, sell from 24,000 to 24,300 with risk at 24,500 and target 22,800. Silver, sell from 7,150 with risk at 7,350 and target 6,200. Always maintain strict discipline. Do not risk more than 1 to 2% of your capital on any single setup. This analysis is for educational purposes only. Market conditions can change rapidly, so stay updated with our Telegram channel and website at link-to-mustprofitfx.com. Thank you for watching. If you found this institutional breakdown valuable, hit the like button, subscribe to the channel, and turn on notifications. Let us know in the comments which pair you want us to analyze next. Trade responsibly, respect the structure, and I'll see you in the next video.